My friends, what is going on? Welcome back to the channel. Wanted to jump in here and make my AMC weekly update or outlook, if you will. Want to go over a couple of things. We'll analyze the chart. Want to start from a micro standpoint and then kind of zoom out and look a little bit more macro. Plus, take a look at a little bit of the overall broad market and possibly what to expect there. Before we get started with today's video, you guys know the deal. Not a financial advisor. Everything I'm doing is for education and entertainment purposes only. Please make sure, like and subscribe, all that kind of stuff. If the channel is helpful to you, tell your buddies about it, all that kind of stuff. If you haven't already done so, please follow me on Twitter, Colin_Gladman. That's the easiest way to ask me questions and all that good stuff. Also, if you only follow me on YouTube, I recently opened up my DMs on Twitter, so you can, feel free to send me messages or anything along those lines. I've told everybody I'm only going to leave it that way so long as, reasonable things constantly come through. As soon as they become out of whack, or honestly, if it starts to take up way too much of my time, then I'm going to turn them off. But always feel free to ask questions. So, having said all of that, let's jump into the chart. So, I want to start out, like I said, from a more micro standpoint. So, I try not to ever get way too lost in the weeds because honestly, pretty much the only type of investing that I ever do is going to be long-term investing slash swing investing, okay? And swing trades can typically, take about 30 days, but sometimes they take longer. I've been in like BBIG. I didn't really know exactly how long that would take. I've gotten in and out before, but I've been holding consistently for I think right around a couple months now. Hopefully it could be, a really good week there. But everything that I do is more based on long term. So, like I've said multiple times before, there's going to be key levels and key moments on every single play, key supports, key resistance. If those, resistances are broken, obviously upside's coming. Supports are broken, obviously downside is coming. And that's what you really need to focus on more than anything. And like I've said many times before, everything else can be a little bit getting lost in the weeds. And so I try to always tell everybody, I look at intraday price action just so I know what's going on that particular day. But like I said, there's always going to be key levels. Anything between those key levels, is just going to be noise and how the stock is moving and not that big of a concern. So, but let's talk about Friday, because Friday was a weird, crazy day. Just everything opened okay, and then just massive sell-off across the market up until I think I was looking at my phone and it was like till about like 2:08 p.m. which for me, guys, I'm Central Time. So basically about 50 minutes before market close, everything just, started ripping, and SPY actually closed green and everything along those lines. And so you can see it here, even just with AMC. This is the 15-minute chart, just massive sell-off all day. And when I say massive sell-off, the only good part about this massive sell-off, if you will, is going to be the fact that all of this was done on some of the lowest volume of the day. Okay, and actually one of the biggest 15-minute candles was the very last one of the day. So all of that is an encouraging sign. I mean, once again, a drop is still a drop. It's not a fun drop, but if the drop is done on little to no volume, lower than average volume, then when the market or that particular stock does decide to do a reversal, then none of this is going to be hard resistance to break through on the way back up. But overall, I mean, AMC took, I think at one point it was down like 10 or 12%, something like that. Let's just go here from the top to the bottom of the day. Yeah, almost 15% sell-off at one point in time, which is obviously a big move daily, pretty much on any stock, okay? Now, some good news that did happen was it did fill this gap right here, okay? So there was a gap right here around that $11.80 range. It definitely came down and filled that. Now, there is still another gap below that at that $11.20 range. Now, those of you that have been following me, I've talked a little bit about these gaps that before in that pre-June run sequence that there were some breakaway gaps that were never filled. So not all gaps have to be filled, but typically they are. okay? So if this one does get filled, it's not the end of the world, but when we're about to see, big moves and larger volume and everything like that, when that does come in, seeing some breakaway gaps is actually a good thing at that point in time. So massive sell-off, but came down here where the previous gap was and then started to recover at that point in time. So, and if you look at that, let's see if that matches up with any of the, normal fibs or anything like that. So running a Fibonacci retracement from over here, from the low at about $9.70. And this is one of those moments where you just go, man, I wonder why it bounced at this number. Well, because that was the 618 retracement, almost on the perfect tick. The 618 retracement is the most common retracement to see a reaction out. So this one and the 382. Okay, so the 382 and the 618 are the two most common. AMC really likes those 618 retracements and even sometimes likes these 786 retracements. So even if we got that, that wouldn't surprise me at all. But as of right now, we got a nice push. And when it came up here and met the 0.5 at that $11.96, it pushed right on through that. And there was a nice little uptick in volume. But this is also why I tweeted out, it just doesn't matter how good of a setup you have if the overall market is awful. Like, unless there was a catalyst, like unless, I don't know, something crazy came out that like AMC was buying all of Cinemark or something like that. You're not going to have AMC beat the overall market unless there's like a big catalyst to go along with it, okay? So if the overall market is bad and AMC is just doing its, normal thing, if you will, it is going to largely follow the overall market just like it did on Friday. Massive sell-off all day, big rebound towards the end of the day, okay? So that's just, you don't have to like it or anything like that, but it is reality. And my channel is going to be about dealing with facts and reality and not hopium. So we had the massive sell-off just like the overall market, but we had a nice bounce here at the 0.618 and didn't even really find resistance here at the 0.5, kept busting on through. So when I also tweeted out, I think it was Thursday going into Friday's market, everything was looking so good on AMC, and here's why. Like, if you look right here, we were on top of the 20-day EMA, did break through, but then the 50, it came right back through. And so the 50 had been offering just awesome support. And then Friday happened, and it just busted through every single EMA possible, causing them all to curl down. But we were just staying on top, and everything was looking good. I'll go out here to the hourly chart. Same thing. So, going into Friday, everything, we're just riding on top of the 20. Struggling with the 100, was hoping we were going to bust through the 100 and maybe even potentially get up here to the 200. I think at the start of this last week, I was saying I was hopeful we would get to around that $14.50 mark, $14.50 or $15 right in there. And I think we got as high as $13.50 or so. Yeah, $13.34. We came out of the gate and I was like, yeah, we could easily see that dollar move, up here. If we could break through the 100 EMA and start pushing up towards the 200, then I was going to be insanely bullish, going into this week. So, but we broke. We had the cross right here. The 20 broke underneath the 50. And so that's why we saw the continued sell-off. And a lot of that is just going to be the computer algorithm stuff, guys. You can look at the overall market, pretty much every single stock traded in the exact same pattern. And my personal opinion, I do not have any proof of this, so this is speculative on my part. But my personal opinion is, the way these computers are programmed is just like, oh, a 20 broke underneath the 50, automatic selling occurs on that stock. And then you got, the 20 over, went over the 50, automatic buying on that stock. You saw a huge run as soon as that crossed over. Also, too, you can look at here, the 13 and the 48 EMAs on the 1 hour. They had just crossed right here. We were just sitting right on top of it with a big old green candle. And then Friday happened once again. We got the cross there too. So it was just everything was looking great. I want to go out here to the 4 hour chart. This is what I was looking at on the 4 hour chart. We had this big green candle, right here. And then just, golly, that's just a massive red candle. But then once again, a little bit of push up here. And then if we go out here to the daily, we were sitting right here, just underneath it. So just underneath the 20. Was hoping maybe we would recover the 20 by the end of day, and instead just got the massive sell-off. So it is what it is. But Friday was definitely not the day I was hoping for AMC. BBIG looked good. Held up really well, even closed green, but AMC not so bueno. So what do we want to see here? Well, we're going to need to see us obviously, getting back towards the upside, and we're going to want to see that relatively quickly. Otherwise, we're going to start looking at, once again, lower lows. The potential on the daily that I was looking at is we don't want this to become a bear flag, okay? So a bear flag is basically going to be where you've got a channel that's kind of coming up like this. So if we do keep pushing up to the upside, but let's say the volume keeps dropping. So if we start making one of these kind of moves, but the volume stays low, then we could potentially see this. And then you have another bear flag, and then it keeps coming down. I'm not saying it's necessarily going down to these levels, but that's how bear flags work, okay? So we are kind of in this ascending channel, but we want to see, some real good positive signs. And like I said, everything was looking great until Friday. So I am not as bullish as I was. Just once again, based off of Friday's price action. This daily, this is a massive bearish engulfing candle. So the candle, opened above the previous day, closed below the previous day, and I mean, this is very bearish looking. Now, the only good news is, once again, is the volume wasn't great on that selling. So, this could be a little bit of a fake out. And if we go over here, I'm actually going to pull up the broader market for a second. So I'm going to pull up SPY. If you go out here to SPY, and we come down here to the old COVID crash. So SPY just had basically right on the 382. And once again, people will tell you TA doesn't work, but it does. But right here, came down and hit that 382 retracement right around that 380. So my most plausible, my most likely scenario, which you guys know me, that's how I always deal on this channel, is we push back up to at least the 0.236 retracement. So coming back up here to around that 420 range or so. Now what we want to watch here to see if this is going to be a real pushback up or a fake pushback up before we then continue to sell off is we have got to watch the volume in this situation. So if SPY does start making a rebound this week and start coming up here, towards this 420 level, we really want to see what the volume's going to be like. If we start pushing back up and we start doing one of these and the volume does one of these, then I'm going to be this is fake. We're going to come back up, touch, maybe come back down here before pushing down towards the 0.5 and the 618. So like I said, the overall market is going to be in control of us as of right now. So I definitely think we're going to have a good positive reaction here, but then once we get back up here towards around that 420 range, it's really going to matter. Now let's look at my cycle chart. So once again, I've been posting and talking about this chart for almost exactly 2 months. So March the 26th was the first time. And I actually called this move right here, which is where I said we were like at, I think we were like at $19. We were in this range right here. And I said, we got to really be careful, up here around this $34 range. If we don't have massive volume, the moment we hit 34, then we're going to see this massive sell off. And full and fair disclosure, this has come back and retraced further than I thought it was going to. So once again, what I've been watching, sorry guys, what I've been watching is going to be the pre-June run, and the reality is there's people talking about the pre-January run, and as far as I'm concerned, they're honestly pretty much the exact same setup. It's just where you feel like you can watch and track everything better is what I would recommend. So some people are watching, January for similar movements. I'm personally watching June, and that's why I've pretty much been calling out, very accurate levels, except for Friday. And you can see if Friday was going to, be good to us, then that would put us, right around in here. I've said multiple times I was wanting to see this upward accumulation. So once we really started going to what I've always called the launch pad, this upward accumulation is what I've been, watching for and tracking. I did think this one dipped down a little bit lower, so maybe that's kind of why we're seeing, the reaction that we're seeing right now. But I really thought about that 1150 range was going to be about as low as we would go, and we came all the way down to like 970 or whatever. Right around 970. So, but none of this is invalid yet or anything along those lines. We just want to see that upwards accumulation, continuing up here. Right around that 2250 mark is where I'm going to really want to start seeing some nice volume coming in. So overall, so long as we keep, getting this kind of move where we just, kind of keep coming, up and down. But so long as we, to a large extent, just keep making the higher lows and the higher highs, that is going to be overall what I'm looking for. Now, I've also said multiple times on, my cycle chart that everything is taking way longer. Everything is taking way longer. So if I just go from blue box to, somewhere right around in here, well, I'll tell you what, let's just go from two areas that I feel like are almost identical. So we'll go from the blue box to the peak. That took 18 days. Okay, from the blue box over here to its peak, that took 68 days. Okay, so I'm not gonna freak out or anything along those lines, because of this. Now, if we did wind up coming down here and actually making another lower low, then I would start becoming concerned, mainly because we had such nice volume starting to come back in once we got here. Just like you can see down here, once the actual spring happened, then we started getting good volume coming in. So if overall this one on the left side, took a lot shorter time than this one on the right side, then we could be looking at, so if I go to like, let's say, as I've always said, it's kind of taken about 3 to 4, times as long. If I go over here, so now I'm going to be on the 2-hour chart over here, then you can really see the similarities in these two charts. So, like I said, not freaking out or anything along those lines, but I definitely want to see us, getting back here towards the upside, once again, up into about that 1450 range. So overall, that is going to be what I'm looking at. Now, if we get back in here, we'll go back over here to AMC. So, some upside targets that we need to be paying attention for, as going to be some key levels, is, right here, like I said, I just kept saying that 1450. So the 236 of the fib base extension is going to be 1474. So once we get to what was this support here for, it looks like 1, 2, 3, 4, 5, 6 days. Once we get back up here to this support, or that 1470, we definitely want to see a big breakout. The 236 can lead us to the 382 to the 0.5, and that'll lead us to our upside fib targets. So, big on watch for me this week is going to be, can we get back up to around that, 1450? And if we can break that, then that should be pretty much, starting to send us up to that 1750. And if we start seeing upward momentum and we see some volume increasing, or at least, staying the same as these bigger candles over here. So let's call it in the $50 million $50 million, 50 million shares traded range. That's going to be overall what I would be looking for. So that's pretty much it. Friday was a bit of a downer day. We'll see if it was a sort of fake out day, but I mean, overall, that candle is nasty on Friday. Good thing is it's not, like I said, it's not a high volume candle. If that was a high volume candle, I'd really be like, dang. But like I said, it's not AMC, guys. Okay, and I know some people will be like, you're right. It's the manipulation. But in like I said, some people are just like AMC is highly manipulated, and what I'm trying to say is every stock on the stock market is highly manipulated. So that's why you need to know how they work and how they run. Okay, so it's not just your beloved AMC. If you follow BBIG for any amount of time, it's highly manipulated. Ever since they added options to the Mullen stock, it's highly manipulated. I mean, all stocks are highly manipulated, and a lot of them are manipulated through options. That doesn't mean options are a bad tool or anything along those lines. It just means it's easier for them to control stocks that have options attached to them. So that's going to be what I'm looking for. So upside targets, we definitely want to see, that 1450 and the 1750. We'd love to see those. As far as downside targets go, then we would want to see, we already hit the 618, right on the tick pretty much. So then the next one would be the 786 at right around that 1070. Then we got the 885 at 1020. Anything below that, it's probably going to be a lower low, and we just need to be ready for that. But like I said, that'll be dictated over the overall market. When the overall market was doing great, AMC was doing great. When the overall market was looking awful, so was AMC. So we're attached to the overall market right now, unless some type of catalyst comes out to tell us otherwise. That's just reality and what everybody needs to expect. So that's going to be everything for this Sunday afternoon. As always, if you have questions, follow me on Twitter. Please like and subscribe, and have a great rest of your weekend. I'll be around all week this week, so I will see you bright and early tomorrow morning, ready for another week of fun, battle, whatever you want to do. But at the end of the day, just stay calm, stay cool, all right? We'll get there, okay? No one promised easy, and that's okay. I'm okay with hard journeys, so just got to sit back, chill. I'm just going to keep averaging down any chance that I can. I'm going to keep selling my covered calls any chance that I can. Probably do some far out of the money cash secured puts just to keep that premium rolling in as well. And just chilling. Okay. I recommend you do the same. Have a great weekend, my friends.